Welcome everyone to the Realty Debate. Every week we focus our attention on an issue or an important subject in real estate. Today we'll get down to figuring out what's going on in India's largest real estate market, Mumbai. Are sales of homes up or down? Is there more or less offtake of office and commercial space? Are civic amenities and infrastructure crumbling in the maximum city? And is Mumbai losing out to NCR and Gurgaon as the financial capital of the country? My panel, Mumbai and India's top names in realty, Niranjan Hiranandani, founder and managing director, Hiranandani Constructions. So thanks very much for joining us today. Anuj Puri, chairman and country head India, Joan Langlasal. Anuj, good to have you finally in the studio. Balaji Raghavan, CEO and CIO, Real Estate Fund, IIFL. And Sameer Jasuja, founder and CEO, Prop Equity. Gentlemen, thanks very much for joining. I'm sure today is going to be a very interesting discussion, but I'm going to zone into the residential property first because that concerns maximum number of our viewers, and lay down some facts on property prices, how they behaved in the Mumbai market. If you look at 2007 as the base year, they've risen 90% till 2012 first quarter. Now, Mumbai's market withstood the global economic meltdown quite well in 2008, and prices didn't actually go down at all. In fact, they rose by 70-odd%. The steady, reasonable increase in home prices of Mumbai continued throughout 2009, but in 2010, something happened. Mumbai's realty caught fire. Mumbai Residex jumped a whopping 41%. Now, that kind of rise in prices is difficult to sustain, and that's what happened in 2011. Prices rose another 19% till September, but they finally couldn't sustain the momentum. And the last quarter of 2011 and the first quarter of 2012 saw prices mellowing down and actually coming down by 4% as a market-wide average. It almost seems that home buyers said, we simply cannot afford anymore. The question is, what's happening now? Niranjan Hiranandani, first question to you, sir, because you know this market inside out. We almost saw a sort of a deadlock. The buyer said, okay, I'm not going to move and buy at these prices. The developer said, I can't bring the prices down for many reasons, and we'll come to that. But we also read reports that even though prices were held on paper, big discounts were given away. Now, the question is, how widespread was that news?
I think there is a lot of reality in this real market. I think what has really happened is there was a liquidity crisis. So a large number of developers who had overextended themselves, borrowed long in terms of things, but were unable to maintain repayment of debt. And I think this is across the board, across the country, not only in Mumbai, Delhi, but probably all over the country. And we saw the same in Mumbai too. Those developers who were overextended were in difficulty, had to make sales, and because of that reason, many of them wanted to sell, and some of them couldn't sell them at the prices at which they had bought land. So I think there was a crisis for those developers who really couldn't match liquidity at a particular point of time. As far as the overall growth of the market is concerned, believe you me, that has grown more than 25%. So as a growth in terms of demand, there's a huge growth of demand, but people are not too sure. Are the prices going to go up? Are the prices going to go down? So there was a deferment of closing of sales. So I think putting these two factors together, A, the liquidity crisis for many developers, little tightening up of the investment market, and also the fact that there was an insecurity of the international markets and the local markets, I think brought a little shakedown of a lot of people who did not want to buy on those days.
You know, the figures are very confusing, Anuj. We're reading reports, some say 80,000 unsold units, some reports say 1 lakh. We also, look at absorption rates, and then figures which we read are 37 months to clear the current stock. Now, Niranjan mentioned the fact that it was developers who were cash-strapped who gave discounts away. But then Mumbai developers are sitting on a debt of 6,200 crores. So what does one believe? I mean, how do you read all these numbers and signs?
As Niranjan Bhai mentioned, that there was a huge amount of stress in the system, particularly on the liquidity, on the developers who had over-leveraged. But there were two other factors that combined with it. One was that on the luxury segment of the residential, we saw a huge amount of stock coming in. There was a demand on the luxury segment, but the demand was much lesser than what the supply was getting built up. So clearly we saw some stress in the luxury market. And when I say luxury, in Bombay, it's apartments valued at in excess of 20,000 to 50,000 rupees per square foot. And that's where we saw the stress. The second stress that we've seen is largely in the Navi Mumbai sector. And interestingly, there's been a huge amount of speculation that has gone in that market, largely because there was going to be an international airport that was going to come in. And there was, on the back of international airport, there was a lot of economic activity that was going to happen. So there was a huge amount of speculation in buying land and then apartments being built, which unfortunately have been sold to speculators who are not really being able to do anything with that stock. So clearly we're seeing stress in the developers who are over leveraged, in the luxury market where we're seeing that the supply is far greater than the demand, largely in sort of the South Mumbai location. And then we're seeing one micro market, which is the Navi Mumbai micro market, under stress purely because of the speculation. Other than this, if you were to look at it, the other markets are pretty rock solid. The demand has been pretty much above the supply. And also a lot of the supply that is being shown is really just on paper. Given in the last few quarters, the approval process has been extremely slow by the local authorities, that the new supply hasn't really hit the ground. And due to that, we're seeing that the demand continue to remain higher than the supply, and the price stress in those markets hasn't really come to the developers, and really that has been a boon to many of the developers who are operating in the suburbs in that price range of 8,000 to say 12,000 rupees per square foot, which has been pretty strong with very little new supply hitting the market.
Balaji, would you agree with that summation? That is the luxury market which has got hit, and probably some areas of Navi Mumbai where there was a lot of speculative interest. Other than that, the Mumbai market remains fairly steady in terms of the demand factor?
Yeah, absolutely. I agree with Anuj. Essentially, what we see where there is a problem is where the products as such are beyond the range of affordability. Now, today, if we look at central and southern parts of Mumbai, specific micro markets where prices are upwards of 25,000 rupees a square foot, product ranges are starting from 3,000 square feet an apartment. Now, obviously, there are issues of affordability as well as, the sentiment being down. I would say a reluctance to buy in these kind of products. However, if you look at the suburbs, the northern suburbs and so on, wherever prices are below 10,000 and a configuration of, let's say, below 1,500-1,600 square feet or so, going right down to maybe 800 to 1,000, sales continue to be robust.
All right. So I'm going to, before I come to Samir, I'm going to read out some data from Prop Equity, which again corroborates almost the same points as made by the panel so far. Inventory overhang figures. Now, if you look at it, interestingly, South Mumbai, and I'm sure this will be considered as the luxury market because just land is so precious here and property is very expensive, has been 33 months. Central suburbs is 16 months, so really no case of panic. Western suburbs, 22 months is a little high, but again, 24 months is safe. Developed areas of Navi Mumbai, again, Navi Mumbai is getting split. So if you look at developed areas, which are the posh areas of Navi Mumbai, 19 months, no panic situation. Developing areas of Navi Mumbai, that's the one which Anuj, Mr. Hiranandani, and of course Balaji have all spoken about. There it's 20 months, so slightly high. Thane 16, Kalyan 17. So Samir, where's the debate then? It seems that the Mumbai market would only go one way, which is up, but it isn't happening.
Yeah, I would agree with you that I don't think Mumbai market is going to go up, because I think personally, if you look at the price appreciation trends over the last 3.5 years, they've gone up from 40% to about 90% in certain regions, and affordability is definitely going to come in at some point of time or the other. Even though the new launches have come down a fair bit, but if you look at ready properties, there is a lot of demand on that side, and prices have gone up even further. But as far as the price appreciation point of view is concerned, I don't think Bombay is going to go any further from here. As far as the oversupply is concerned, I still think that there is a lot of unsold stock, even though it's on paper. And now that the DCR rules have come out, there is going to be fresh supply that will come up. For example, 10 million square feet of supply is going to come up in the lower Parel Worli area. So that's going to definitely impact prices in the near future.
Mr. Hiranandani, how do you tackle with a situation like this where you have cost pressures, inflation pressures, and you also are looking at, even though we say that it's not an oversupply situation, but things are looking a bit weak on the pricing front. So what's in store for 2012? Are prices going to go up or probably stay the same as where they are?
No, I think we have to understand that we are in the business of real estate in the long run. And if you look at the long run demand of real estate, there is no problem at all in terms of demand of real estate, and there's going to be an increasing demand. I don't see any reduction in demand. As far as the problem of the pricing is concerned, there are two aspects of it. One is, of course, demand and supply at a point of time, but the real factor which is there is supply in the long run. That's a big problem. That's an impossible problem. That's a difficult problem. And this is a problem which I'm seeing in the last couple of years, which is almost impossible for us to tackle. We're just not getting permissions. It's dilatory. It's time consuming. It's expensive. It's difficult. Now, under the circumstances, what's the situation? The real demand for real estate at the macro level is increasing compoundedly. There is demand for young people, there is a demand for business, there is a demand for housing, and there is still migration coming into the city. So I think you're going to see an increase in demand in terms of buying. In terms of supply, no matter what you talk about the DC rules and other things, I'm not seeing real supply on the ground. Permissions do not come. There are public interest litigations. There are issues that have stopped almost 20% of the projects as far as Mumbai is concerned. So I don't see this supply happening. And I don't see, because of that reason, the prices falling down in the near future, and there's no possibility of doing it. In fact, if you ask me honestly, I see a long-term increase in prices simply because there is inadequate supply, and the second, lack of infrastructure to meet up new projects in new areas. So you're not getting supply of land. You have an increase in demand. How do you balance this? It's going to increase the prices. How much and in how much time depends on how the overall economy behaves. But I'm not seeing a fall in prices or softening of the markets in the near future. Not at all.
All right. So no supply seems to be more of a reason why prices are going to hold on, Anuj, in the Mumbai market. And if you look at the population density of Mumbai, then there's never going to be a mellowing of prices. I mean, 2008, we saw that that market actually went up by about 16 to 17% despite an economic meltdown. Even if this is a shaky year, then either there's a stalemate or at some point of time prices start increasing again.
But I'll rider that little bit. You know, you may get periods when prices may fall. Let's say, for instance, in a particular area, there is oversupply, like we talked about in Lower Parel today. Let's say in the next 6 months or 12 months or 1 year, 2 years, there is an oversupply in the short run. It is possible for prices to fall or get corrected to a certain extent. But I'm not seeing that in the long run, especially in the residential segment, because not enough supply is coming in, not enough infrastructure is being built, not even to cater with current demand which is happening. So having said what I said, we have to rider in the fact that you will get corrections in micro markets, whether it is Parel, whether it is Navi Mumbai, whether it is Panvel or any other places. Somewhere you're going to see corrections in the marketplace, but it will be micro market corrections for short periods.
Anuj Puri, Jones Lang LaSalle, this morning I read a report which said that absorption rates actually have started seeing some improvement in the Mumbai market. And there's also another curious thing which is happening. Rental values of homes is going up quite dramatically. So put the two figures together, buyers have started coming back, it seems, maybe slowly. Though a lot of them still find it affordable and are preferring to rent out than to buy.
Quite a few things, Manisha. So first is, price reduction. It actually does happen, and we've seen that in the office market, and maybe we're going to discuss that separately. But we've seen, once the supply goes above the demand, the price correction happens. And clearly in the lower parel market, we've seen where the prices were at 220, came down to 175, came down to 150, and sort of at 135 rupees per square foot. So we've seen that correction happen, but the supply needs to come out, and the supply needs to be greater than the demand. The second uniqueness of Bombay compared to many other cities is the value of land. In South Bombay, the value of land is as high as 70 or 80% of the total project cost. Unless we are going to put infrastructure in this city, unless we are going to open up a lot more large parcels of land, connect them with new infrastructure, the land prices will continue to remain very high. And if the land price is at 70 or 80% of your total project cost, how can the price ever come down? Until and unless your land price comes down, because in the 20-30%, you can't really play that much. So I think that's where one will need to understand the uniqueness of this market, given the very high value of land, and that can only come down if we were to put infrastructure and connect new land parcels where you develop economic activity and people move away from the traditional parts of Mumbai. Just coming back onto what you said is the absorption and the lease rental. I think two things happened. Is one, many of the buyers have got a little bit tired of waiting that the price reduction is going to happen, and are now coming out and saying is, look, we've been waiting for 6 or 9 months. The price reduction hasn't really happened. If anything, with inflation, the cost is only going to go up, as a result of which I'm going to go out and do the buy today, because they haven't really seen the price reduction happen. The second is on the lease rental, we've seen that the capital values have gone up while the lease rentals remained much low. So today in a city like Bombay, the return on investment for residential is about 1.5% as the lease rental, which is minuscule. It needs to be about 2.5%. And that's why we are seeing that the rentals have started to go up commensurate with the increase in the capital value, so that at least the return is 2.5% on the capital value. And that's why we've seen the rentals catch up.
So I have a contrarian approach, actually. 2010, we saw about 77,000 transactions happen in the residential sector, 65,000 registrations happened in the suburbs, and we're down to 45,000 in 2012. So I would really like to understand that if the demand has gone down by 40-odd%, why would you feel that prices will continue to rise or demand would continue to rise, even though supply is limited in the market? Then why is absorption really coming down?
Yeah, basically there are two factors really. When volumes of supply really come down, a large number of people who want to buy the particular flats and the type of flats that you want, really they postpone the buying. And that is what Anuj also mentioned earlier, that the number of people who are going for rental flats has gone up tremendously, and that's why the prices of rental
the
have
increase is only about 2 to 3% in the registration data.
But basically, if you see the numbers which are registered for rentals, they've gone up tremendously. In all our project sites, you'll see that type of absorption which is taking place. So the flats are not really remaining empty if they are ready. So what you're really talking about is the under construction, where the insecurity in terms of completion of projects has gone up tremendously. A large number of projects which have been ongoing have been told that because of fungible FSI which got delayed, TDR 0.33 FSI was delayed. So because of all these delays, what happened is a large number of project people could not actually sell the flats, and if they had pre-sold the flats wrongly, they were not able to deliver. So what happened is there was a little bit of a lack of confidence in the interim period, where people couldn't be sure as to what is happening because there were delays which were unprecedented to say as the earlier situation. So I think what has happened is, see, you can't postpone not having lunch, dinner and breakfast. But if you want to buy a house, you can certainly postpone it by 6 months or a year. And if you think that more material is going to come into the market and stuff like that, the actual buyer doesn't mind waiting if he really sees that situation. So when I talk about demand, I talk about real demand of people who actually want to buy their houses and homes for their own use. By no stretch of imagination can you ever imagine that that demand has come down by even by 1/4%. But what you're saying is absolutely correct. When you come to closing deals, when it comes to actually putting your money where your mouth is, there are times when the world recession is there, stock markets have collapsed, businesses are not doing well, people don't have disposable incomes in their pockets, financial institutions are a little lethargy because they have brought down that 90-10 lending to 80-20 lending under the new guidelines of RBI. There are certain other banks who have said, no, now we want, an additional person to join in as co-security because things are going through a little difficult period. Yes, I agree with you. There are going to be less closures, but I don't agree with your numbers.
These are facts.
So this is what I want to ask the panelists in Mumbai. Are we saying, Mr. Hiranandani said a very interesting thing. Look at the way real estate supply is coming into the market, not just in Mumbai, but all over India. So maybe you can postpone a decision by 6 months to a year, but you really can't live without a home. Yeah. Ultimately, then, does that make real estate the most safe investment? Balaji, you want to take that one?
See, real estate is always perceived in this country as the most safe investment because in this country, people like the look and feel of real estate. And when you talk to investors, I mean, these are very anecdotal numbers, but you get the feeling that anywhere between 60 to 90% of investor wealth is in real estate. So it has traditionally always been this, perceived as the safest bet, probably next to gold. Now, therefore, this attitude, the Indian investor's attitude or the end buyer's attitude continues and will remain for a while because the priority of purchasing a home is always there. I mean, any demographic profile you take, any class which you take, their first priority for the family is to purchase a home. So, therefore, what one needs to see is that which are the segments which need to be sort of capitalized in order to serve that kind of a profile and continue with the demand and growth of this industry. So I think it's a fairly simple equation over here where one just needs to match at any given point the income levels, the demographics, the affordability with the supply which is there. So in Bombay, unfortunately, in some of the micro markets, it does not happen. So which is why wherever there are highly leveraged players and product configurations are not okay, like I said before, the prices are bound to correct. And like what Mr. Hiranandani also said rightly, there are various other factors which have impacted demand as such, which is, affordability not only in pricing, however, in mortgage also has gone up. I mean, interest rates have gone up, EMIs have gone up. So which is why I guess the end user prefers to rent today. Now, however, this is not something which is going to be permanent. Now, given the entire, I mean, you look at any data which is published, given the housing short supply which is there in this country, in the longer term, one will see absorptions which will be healthy. And I would say that whatever supply is coming in today across the country, whether it's Mumbai or outside, I would say it's still insufficient.
Okay, so essentially, then
I still like to ask one question.
estate?
Why is the supply in Mumbai not increasing then? If you look at the north markets, if you look at NCR, supply increased from 30 to 50,000 units in Noida and Gurgaon to 100,000 units over the last 2.5 years on an annualized basis. But if you look at Mumbai, it's stagnated at 50,000 units a year. And if you combine MMR, it's still at 70 to 80,000 units a year on year basis. So if there is so much demand, why is supply not just catching up? And unsold inventory is just keeping on going up.
Well, I think two things. One is, NCR market is a very dominant market. 50% of the total residential real estate comes from NCR. So it's a very, very dominant market. So, it'll be a little bit unfair to compare NCR, which is such a dominant market that 50% of the country.
That's just happened in the last 2 years. If you go back, MMR had overtaken NCR.
And I think the reason for that is the infrastructure that has come into the city. Sure. The NCR, the way the government has put in the infrastructure, whether that is the metro or the expressways or the connectivity or the new airport T3 terminal that has come up, clearly it has opened up huge amount of parcels of land. Similarly in Bombay, I'm saying is you will have a lot of development take place if you were to connect North Bombay, if you were to connect, Panvel, if you were to put in Cross Harbour, and you were to put in the rail and the sea link and the roads and the water.
Gentlemen, hold your thought there. Because infrastructure is something we have to talk about. I mean, any city and especially Mumbai, when you see 90% plus prices of homes rising in 4 years and then look around to see crumbling civic amenities, the pressure on roads, transport, slums, You really wonder, why do you pay so much to buy a home in Mumbai? Why are prices in Mumbai higher than Manhattan? So we're going to get to that when we come back. Welcome back. Mumbai's real estate. What's going on is what we are focusing on today. Mumbai region, where we are referring to as MMR, is one of the country's most densely populated cities. It's also a city where almost half its population lives in slums. Simple numbers tell a very compelling story. According to Jones Lang LaSalle, only 15,305 crore rupees has been invested in key infrastructure projects of Mumbai since 2005. During the same period, real estate has seen a substantial investment of 27,608 crore. And the result of lagging infra is horrific. I mean, without going into the details, if you just look at something as suburban train system, on an average, there are around 3,000 deaths in accidents related to local trains each year, which means Mumbai local trains claim 8 lives per day. Anuj, I know it's a little unfair to read out these statistics because it's more horrific and has a larger impact than what we want to actually drive here. But that's the fact of the matter. I mean, pretty much the state government is completely frozen on infrastructure here. So real estate seems to be doing its bit, but not infrastructure.
Very interesting, Manisha. So, clearly infrastructure has been a big pain point in Bombay. And, I do not even see that there are infrastructure projects that are happening. If you go to some of the other cities like Delhi or Hyderabad, you see actually infrastructure, lots of infrastructure projects happening. In Bombay, you don't even see those infrastructure projects. You look out of the window of your car, you see a huge amount of slum whenever you travel. You look outside, five-star hotels, and you will see during monsoons all blue tarpaulin, which is really just covering all the slums, and you will look overview from a multi-million-dollar apartment, and all that you would see is a lot of people sleeping on the road. So clearly that has been a big pain point, and unfortunately, I'm not seeing that the local machinery here is thinking about infrastructure or taking initiatives of infrastructure. On the other hand, the real estate continues to boom. And there is, increase in the prices, whether it's residential or the activity on the economy side. I just think there's one point which is driving the city, and that is the people of the city, the intellect capital that is available in the city, the trained manpower that is available, and the work culture. And that is what is bringing a lot more companies into Bombay and driving that economy. As a result of it, people are forced to live in here. I'm not sure that many people may want to live in here given the pricing and the corresponding infrastructure, but because the job opportunities and the economy is here, given the trained manpower, that's what's prompting the growth in the real estate sector.
Balaji, where will the additional investments come from? So again, it's a catch-22 situation where the local bodies, the state government says it doesn't have enough money. Should funds like yours, should more public-private participation be rooted out, chalked out, because nothing seems to be happening. So how long will real estate keep up?
You're absolutely right, Manisha. See, the basic issue in this city, I would say, is that unlike, let's say, an NCR, now there is a lack of a complete master plan. Now, if you look at NCR, for example, it's a city which has been planned with zones and where should what asset class be, and so on and so forth. In Bombay, unfortunately, most of the development which has happened is haphazard. Now, unless there is will in the state government and obviously PPPs, as you rightly said, for various projects which need to be undertaken, things will really not improve. And also, see, a lot of land which is available can be unlocked. There is a lot of potential in this city to unlock a lot of land which is available. However, there needs to be a will, there needs to be a concentrated effort, whether it is, the slum projects, where, I mean, at least now you see some movement on the slum segment with a separate authority in place and certain processes in place. However, if you look at the dilapidated buildings, then you have so much of vacant land available on the eastern side of the city, which probably is not being put to good use. So essentially, the government needs to find the will, and I'm sure that once there is a will, there will be enough opportunity to do a partnership with private players. I mean, one such example, if you see, is I would say the new airport which is coming up. which is a case in point that these kind of things are possible in the city.
So infrastructure is one story, Sameer, but slum redevelopment, I mean, you and I have been discussing that for so long. Just to have that tag of being the world's largest or world's city which has the largest slums is not a nice tag to have at all. And even on that front, progress is so painfully slow.
You know, but if the political will is there, I think the best part about Mumbai is the hidden gem is actually the slum rehabilitation scheme that Mumbai has, and the 60% of Mumbai is still living in slums. If that can be released through government will, and if the government fast tracks these slum rehabilitation projects, I think Mumbai will have enough capital to probably fund the entire country's infrastructure, if not just Mumbai alone. And I genuinely believe that, and it's just that there's so much corruption out there and the process is so slow, and if that is fastened, I think Mumbai will be rid of all the capital issues with respect to raising capital for infrastructure. Would you agree with me, sir?
Yeah, I think there's a lot of opportunity there. But Manisha, let's put a positive note to this infrastructure story, which looks so depressing. Last August, September, we had an interaction in Indian Merchants Chamber with our Chief Minister, Mr. Prithviraj Chavan. And he has put across to us in that meeting, he mentioned 4 large infrastructure projects, and if I can recount them, one was, of course, the Navi Mumbai airport, which he pushed through and is trying to get the environmental clearances finally into place. So that is likely to come about, is what his desire is. His second wish list, which we had put up, was the Cross Harbour Bridge. And he said that he wants to take it as quickly as possible. The third was the metro train for Mumbai, which would be right from South Mumbai right up to, I believe, up to Sahar, if not up to Borivali. And the fourth was the coastal road, which would be a new coastal road which would hug the coast of Mumbai in order to make a difference. And I did see newspaper reports where Mr. Prithviraj Chavan talked to the Prime Minister and requested him to make it into national projects on a similar line to what is done in Delhi region. So I do see that these things have not taken off. I do see, and of course there was one more. There was a Pinjal River project which will bring 24/7 water to Mumbai. So Mumbai, if we have the Pinjal River project, which is about 10,000 crores, will get 24/7 water to Mumbai, which no city in India has today. So if you combine these 5 projects, and if we can actually take it off, and there's no shortage of money for all these projects, because they can be either funded by the government, central government, Jawaharlal Nehru Urban Renewal Mission, public-private partnerships and other things. And there are institutions like these and others who are ready to invest. In fact, I had talked to the Chinese government in some informal meetings to the Indian Merchants Chamber that they're ready to invest into the metro of Mumbai, and they would invest into that capital. So I don't think there's a problem of investment, but I think and I hope to God that we will be able to take off all these projects. So there is some vision which has been put on the table in terms of what the infrastructure can be. And if these take off quickly, I think we can catch up with Delhi, if not go ahead of it again. As of now, I think Delhi is far ahead of Mumbai in terms of infrastructure. Like Anuj mentioned, maybe 100 times faster. But I think if we put these 4 or 5 projects on the ground, as the Chief Minister has mentioned to us in open meetings, public platforms.
I'm not so sure whether the Chief Minister, I'm sure it must be before that, woke up after or before the McKinsey report, which said that you will actually see Delhi overtaking Mumbai as the commercial capital. Its GDP contribution to India is going to be much higher than Mumbai. But having said that, Anush Puri, it's not that easy. I mean, one is to talk about projects, but you look at one ceiling, it takes about 10 years to put it together. So any infrastructure project you start today with best of intentions is still a long gestation period. And a decade ago, I think the government chalked out 42,000 crore plan to rebuild the city's infrastructure, and well, 1/4 of it is ready. That's about it.
And Manisha, it's also very evident from the commercial leasing data. If you were to look at it, clearly, it used to be Bangalore, which was the IT hub, followed by Bombay. Over the last 4 years, Delhi has substantially overtaken Bombay, and clearly, Bombay has relegated to number 3 slot. So it's now Bangalore, followed by Delhi, given the way infrastructure has been laid out and connected Gurgaon and Noida, stroke Greater Noida. There's a huge amount of commercial activity that has gone in those markets, and Bombay has been relegated to as a number 3 spot. I again emphasize that infrastructure is a big issue, but the biggest positive for Bombay is the resource, the manpower, the quality of talent, the work culture, and particularly connected with the financial community, and that isn't going to go away in a rush. So clearly, Bombay still has a big opportunity to be able to come back, given that the businesses depend upon those resources. But the city needs to really start rebuilding its infrastructure quickly, and they've done it. So if you look at Bandra Kurla complex, it's been beautifully laid out, and we've seen a lot of the multinational and Indian financial corporates going into Bandra Kurla and really developing as a commercial hub, leaving Nariman Point, which is sort of cracking on the seams, and moving on to Bandra Kurla.
But don't you think, Anuj, affordability
Sameer,
actually
what's your
plays...
view, you think?
See, my view is also on
Sameer,
affordability.
What's your view?
I think, Manisha, I think one of the other reasons why I think Mumbai's got relegated to number 3 spot is the affordability. If you look at leases or rentals in Noida or Gurgaon, you get grade A office spaces at 40 to 60 rupees a square feet. Whereas if you look at BKC, it's at 250 to 275 rupees a square feet. So other than just the infrastructure, I think affordability and cost of real estate over here plays a very big role in making Mumbai not an attractive destination anymore compared to the migration that is happening, compared to the knowledge workforce that we have in the city. What would you think?
Yeah, and Sameer, it is true. But at the end of the day, you're doing business for doing business. It is not doing business for just saving cost. If you don't have the quality of manpower to be able to deliver the business, you may go into a cheaper location, but at the end of the day, you're not going to be able to deliver that product.
But that's why only the financial services industry is doing well in Mumbai.
Which is exactly what's happening.
So there are not too many jobs getting created in that space.
You're having the premium service line being retained into Bombay, and the lower one are getting into other cities. So, your call centers went into Gurgaon, your BPOs went into Gurgaon, your IT went into Bangalore, your software development has gone in there. But the financial hub, which is the most premium, who has an ability to pay that kind of price, is what is getting retained in Bombay. Now, whether it's good or bad, but that is what the quality of talent is able to deliver, and that's the product which will be able to afford.
I'd like to ask you this question. Is there really a difference in quality of people? You mean to say, if you look at the financial services, of course, because probably RBI and SEBI are housed in Mumbai, so therefore there could be some extra attraction there. You've got exchanges there, but other than that, I would really debate this premise that NCR will not be able to attract the same talent. I think there is a lot of legacy why Mumbai is a financial capital, isn't it? And that probably will continue for some more time.
You're absolutely right. And Manisha, I think it's a separate debate. I'm a sort of Delhi wala, moved to Bombay about 12 years ago. So it's a completely separate debate on the work culture. But I can tell you is that the quality of talent is, far superior in the financial services available in Bombay compared to some of the other cities. And also, the work culture here is a lot more professional in terms of the delivery of efficiency and the productivity. Again, not necessarily comparing it to Delhi, but some of the other cities in India. But you're absolutely right. The people will suffer only for that time. Given the cost of living, the education, the ability to make that money work harder in some of the other cities and get better infrastructure will start to prompt people to relocate from Bombay. So it is over a period of time, if we do not mend the infrastructure in city, what you're saying is it cannot be debated that you will start to lose quality talent from the city and hence the economy of the city.
Okay, Balaji, would you look at NCR very closely versus Mumbai at this point of time? Maybe from an investor, we get a better glimpse of where the monies will go.
See, as an investor, we are actually, I mean, we are a pan-India investor, so we would look at NCR, as an investment opportunity certainly, and we do that. And not only NCR, we do look at Bangalore, Chennai, and the other cities which are there in this country. So, I mean, our strategy is clearly to diversify. So, I mean, we are not sort of stuck to Bombay or NCR or anywhere else. So wherever we are able to deliver returns to the investor in specific cities as well as projects, one would like to invest there, agnostic of the geography as such.
Manisha, can I ask one interesting question to Mr. Hiranandani on professionalism? Sir, I'd just like to ask one question to you that, we know about Mumbai being the professional capital of the country, but why has that professionalism not got into the developer community over here? Whereas we hear that the south-based developers are extremely professional. We're not comparing it to the north because they are one step lower. But what would you have to say about the professional community of the developers?
I don't agree with you at all. I think there's a huge amount of professionalism coming in it. But yes, we don't have enough numbers of professional players into the marketplace. But if you look at many of the top-end developers today, they are very, very professionally managed and not so. Let me tell you, even before South India, the first extent of professionalism actually started from Mumbai and seeped into the South, which took it very much more seriously than Mumbai did. So I think we did a start. South India took it more well, and North India still has a long way to go in that sense of the term, as you're speaking about it. But there are a lot of unprofessional people also into the marketplace. So yes, we have a long way to go, and we suffer because of that.
Okay.
All right, gentlemen, we're going to come back and delve a little bit deeper. So we've looked at the real estate market from a residential point of view, because homes are most important, also at Mumbai's lagging infrastructure. But we'll take a slightly deeper look into Mumbai's commercial realty. What are the pain points today and will be tomorrow? Stay with us. You're with the Realty Debate on NDTV Profit. Mumbai was given the title of the maximum city by author Suketu Mehta, and that title has stuck to this commercial capital of India. Mumbai not only leads India in commerce and business activity, generating 5% of India's GDP, it's also one of the world's top 10 centers of commerce in terms of global financial flows and capital deals. So this realty market is closely linked also to the swings of global and domestic economy, and some pressure points are beginning to emerge. If you look at DTZ figures, which they show actually a take-up of office space in Mumbai between April and June 2012 as very subdued, with only 0.42 million square feet of space transacted. Now this was a 63% drop in take-up quarter on quarter. So this is Q on Q figure, and the lowest quarterly absorption recorded since March quarter of 2009. Anuj Puri, what's going on? I mean, I will come to the data of supply later, but is this figure, the fact that lowest absorption rate since 2009, a bit worrying? Not a bit, a lot worrying?
It is absolutely worrying, and particularly, Manisha, if you put in contrast the supply that is there on the real estate, on the commercial real estate in Mumbai. So definitely worrying when you were to look at what the demand is compared to the supply. But if I can just continue with where this demand is really coming in from, and it may be sort of inappropriate to just look at one quarter demand. You really need to look at it over the last 12 months, how the demand's been stacking. We're seeing a huge amount of demand come in from pharmaceutical companies, from Indian corporates, from Indian investment banks, from Indian manufacturing companies on buying office space. And these are companies which had fragmented office spaces spread all across Mumbai. Given the softening of the prices in the office sector, they're all now de-leasing those spaces and coming into shiny buildings and doing their acquisition. So really going out and buying these offices. And if you were to look at it, by the end of this calendar year, you're going to see a huge amount of offtake on the supply side for Bombay, given the interest that has been shown in the recent past by the Indian corporates in buying office spaces.
Mr. Hiranandani, you know, a couple of months ago when I was doing a panel discussion on commercial realty, and almost the sense I got was that any developer, if he was to look at the residential market and a commercial market in most of the top cities of India, would naturally bend towards the residential market. There are very few people who are right now interested in putting fresh monies into commercial and office development. Is that correct? Because you're in both the markets.
To be honest with you, the residential market is far more secure. It is less affected by the vagaries of the economy or international movements of the marketplace. So I would say that that answer is in the positive. Yes, residential segment is far more secure, and a developer would look at a residential segment more happily than a commercial segment. Having said that, you have to understand that many of us, like myself, are in the township segments. And the townships are actually integrated, which means we have a commercial segment, we have a residential segment, we have a retail segment, we have hospitals, we have schools, we have colleges. So we play with the holistic view of investments into this sector. And for us, it makes sense to do commercial along with residential also. And for us, we have had no difficulty at all, both in the commercial and residential segment. But obviously, if you look at the ratio of total production, I would say it's like an 80-20 ratio that really makes sense for us at this present time and will do for the near future. But you must understand that if we have to have a growth story for India, if you don't have manufacturing and if you don't have commercial and you don't build enough infrastructure, and not necessarily in that order, but if you don't do all these three things, you're not going to be able to just make townships with no place for people to work. That doesn't make sense. So you're going to get opportunities to do. The vagaries of the commercial markets are there, and there will be players like myself who will play both the markets, and there'll be people who even today will still go for commercial because they like it and they have made a lot of money into it. So having said that, I would say if you do an 80-20 for India, it would be a safe bet.
And Manisha, if you can just add a
I'm
little
going
bit
to just
more.
read out a couple of figures here, supply and absorption figures. Yes, Anuj, but go ahead before I read out those figures. Your point.
Just one thing, Manisha, so I'm going to be a little bit more controversial. If I had the money and I was given an opportunity to invest in residential versus commercial, I will clearly invest in commercial today in the city of Bombay, because the amount of demand that I am witnessing and the poor supply for the future. So anything that you start building today, Manisha, 2012, will take you at least 3 years on a commercial, if not more. By 2014, 2015, you're going to see a diminishing supply. And clearly, we hope that the global markets by that time would have come up. Indian market would have come up by 2014, 2015. And you're going to see a huge pressure that will get built up on the demand for the office space, and the price rise will start to happen again. So clearly, if I had money today, I would go in and start developing offices, because nobody else is doing that.
Okay, and Anuj, to corroborate that point, now supply and absorption, prop equity data shows that both 2011 and 12 have seen high commercial supply in Mumbai. In fact, there's a huge spurt of commercial real estate supply in 2012, 1.3 million square feet to a little over 3 million square feet. I'm talking about 11 and 12. And even though absolute absorption shows an increase, the vacancy levels are going to rise simply because of the big supply, with the chart showing almost tripling of supply between 2011 and 2012. But the scary part is no new project announcements, and come to 2013 and you see a huge drop of commercial supply in Mumbai to 0.5 million square feet of new supply. So Samir, on the side of Anuj, when it's if you look at the numbers, really you must be getting into commercial real estate in the market of Mumbai.
Well, I'm not too sure about that right now, and the problem is not that big, because nobody really has the money to invest in commercial today. So I think that if somebody has to be very gutsy right now to look at and take a commercial view, because funding is totally dried up for commercial and real estate assets by private equity funds today. And with considering the current supply in the market, the oversupply situation in the market, people would be slightly careful. But having said that, if the economy does well, if the global economy does well, yes, Anuj is absolutely right. By 2015 and 2016, the rental rates should start to rise again, and there should be a lot of interest in the commercial real estate market.
But for the moment, Sameer, your outlook for 2012 and 13, commercial real estate remains dampened?
Yes, absolutely. There are no takers for commercial right now. Rentals are very soft, and they are softening as we go day by day. BKC, for example, was about 300, 350 rupees a square feet a year back. It's down to 250 and 275 rupees, and there are very few takers even at those rates.
Anuj, consensus on that point that the next 2 years are going to remain painful for commercial realty in Mumbai and probably even across India?
I'm not sure, Manisha. I'm absolutely sure on one point that you're going to see the firming of the price. And Sameer's data is absolutely correct. But you need to understand that there are 4 micro markets: Nariman Point, Lower Parel, Bandra Kurla, and Navi Mumbai. A lot of the 3 million square feet that is coming in Navi Mumbai, which is really low-cost IT, which competes with Pune, Chennai, Hyderabad, that market. In BKC, in Lower Parel, you're really seeing the demand absorption so active, so significant that there's very little availability of completed buildings that are coming up. And clearly, in the market that where we are sitting, Lower Parel, we've seen the price rise happen. We've seen from Bandra Kurla, the price rise significantly happen post Lehman time. And there are really very few good quality supply that is up. So over the next 2 years, I am very positive that you're going to see a huge amount of demand that will come up, and that demand will start to cross the supply, and you will start to see the price rise, particularly in these 2 micro markets of Lower Parel and Bandra Kurla.
Balaji, your view, commercial real estate, how will prices pan out?
I would say I tend to agree with Anuj to a large extent that Bombay, and especially, leave aside Navi Mumbai, will see a short supply on the commercial side. And it's commonsensical because you don't have any new supply which is coming up. However, the biggest challenge, as Sameer also pointed out, is that there is an investor's sentiment and a way of looking at things. Now, the investor is far more comfortable in today's world in investing in residential where there is regular cash flow and so on. Whereas in commercial, till the building is up and ready, you really don't have any revenues which come up. So, obviously, there is a sentiment which is contrary to expectation, which is unfortunate. But I would tend to agree with Anush that given another maybe 3 years or so, we would see good returns, and especially given the fact that in Bombay today, one is seeing a lot of value deals which are coming up. I mean, there is discounting which is happening in commercial, and therefore it is a good opportunity to, I would say, pick up commercial assets.
All right, gentlemen, now we leave it at that. So a long gestation for commercial, but yes, eventually it's going to pay back in a city like Mumbai. And residential, well, despite all its problems, the infrastructure, the crowds, the slums, the fading old buildings, Mumbai remains India's most loved city. And the panelists there, of course, completely agree on one point, that it does attract the best talent. Niranjan, thanks very much. Anuj, pleasure to have you. Balaji, great to have you. Sameer, thank you very much for carrying the panel and making it so interesting sitting there in Mumbai. Now, Mumbai, millions of dreams come true here, and its people may jostle for space, but their hearts and their work ethics are bigger and better than any seen in any other city actually of India. So it's time for policymakers now in the state government to wake up and give Mumbai a serious makeover. Thanks for joining me today. Do send us your feedback on property@ndtv.com and tell us which city of India would you like us to focus our attention on next time that we meet you. Goodbye.